Good afternoon, everyone, and welcome. We're often asked what happens when mum or dad or anyone else dies for that matter, and how you finish off the affairs for your loved one. It's a very difficult time for a lot of people, but a lot of people like to sort out the affairs as quick as possible. And we get often asked similar questions along the way. So I sort of put together a little presentation that might assist you in the process. Okay, so first of all, the first thing you should know is the definition of what is the estate, what is included. The estate takes place is obviously the assets of a deceased person. What's included is the property and assets belonging to the person who dies, which is called their estate. This could include their home, cash, shares, and other investments, cars, personal possessions. It also needs to include debts owing at the time of death. Interestingly, it does include their superannuation. That's dealt with separately by the superannuation trustee and superannuation laws. Also, what is not an asset is jointly held assets, so joint assets with tenants. Life interest in an asset, which is where someone has a life interest in using that asset, possibly bequested them from a previous will of their partner. And assets owned by a company, assets owned by a trust, super, which we just discussed, and life insurance policy, which is directly paid to a nominated person. So the interesting question we often get asked is, why isn't the assets of a trust included? Because a trust is a separate legal entity, and you as the beneficiary will have a beneficiary's loan, and that's what we include, not necessarily the assets of the trust. Being an executor of mum and dad's will or estate requires a responsible for managing the final estate's tax affairs and collecting all the money and distributing out the assets to the beneficiaries as per mum or dad's will. Don't worry, we're here to help you. But to start the process, please provide us a copy of the will, a copy of the death certificate, your mother's solicited, mother or father's solicited details, your mum and dad's TFN and date of birth, as they're not a client of ours. And from that process, we can start the process of getting a tax file number and letting the ATO know what's going on. But these days, the ATO are notified by the death's office of a death that's taken place. As the administrator or the executor of the estate, there's a number of things that you'll need to do. First of all, locate the will, arrange the funeral, celebrate the memories. Apply for probate, and this means listing all the assets and liabilities of the estate and lodging the appropriate forms to the wills and stamp duty's office, and they'll assess it. Inform the investment bodies of the closure and death of the person concerned, and inform Centrelink. Some of these will automatically happen. Locate the assets and value if needed to determine if there's any capital gains implications. Pay any debts that the estate may have, and then ultimately, this includes taxation, and then ultimately we transfer the assets to the beneficiaries and pay the final taxes. Respect mum or dad's final wishes and distribute minor personal effects. Close the estate and lodge the final returns, and the matter is done and dusted. Thanks to our governments, we don't actually have a death duties in Australia. However, what needs to be done is to lodge the final tax returns and any prior returns for mum and dad, so we get ATO clearance. Lodge the estate returns for deceased assets, declaring investment income and capital gains after the date of death. Note, mum and dad's losses that they may have held personally don't carry forward. Any entitlement that a beneficiary is legally entitled to needs to be declared personally. You should provide them the details, and we can assist you there when we do a trust tax return. The estate will lodge returns until the estate affairs finish. They have 3 years to act as a normal individual at individual rates, and beyond that, it's at trustee rates. CGT on death, that can be paid as part of a winding up of the estate or transferred to beneficiaries if the assets are distributed. So there's a myriad of things that can be done or need to be looked at when it comes to CGT and estate planning. But we'll just deal with the basics today. Basically, if you have a pre-CGT asset, which is a before 20th of June, September 1985, it freshens up. So you either sell that and they're at the market value and there's no capital gain, or if it's transferred, the property then becomes valued and the beneficiary will take over that asset at that date with the new value. If it's a post, if the deceased person has acquired the asset you inherited on after 1985, you need to know the full detail of the relevant costs incurred by the deceased person and executor or trustee. You can take over the cost base to determine future capital gains, so that when you sell the property or asset, you'll incur the capital gains that goes with it. As we say, there's lots of rules and variations, so contact to discuss your circumstances. CGT on death of the family home. Mum and dad's home in many circumstances will be exempt if it meets certain criteria, and it's disposed of within 2 years. Meet this requirement if you dispose of the property under a contract that settles within 2 years of deceased death. That's exempt. After the 2-year deadline, you sell the inherited home property after 2-year exemption period has lapsed. You generally have to pay capital gain tax on the capital gain of your property unless it's become your main residence. The amount of capital gains tax you pay is based on the increase in the property's value from the date of deceased death to the date of sale. There's obviously a number of areas that we need to address when it comes to estate planning and winding up of mum and dad's affairs. Contact us and we'll see how we can help you. You can drop us a line at our email at admin or call us on 9597 9966.